Good evening, everybody, and welcome to today's webinar session. My name is Nisha. I am a Senior Marketing Manager here at Syfe. Joining me is Nick. He is our Head of Investment Portfolios. And the three lovely ladies right here, which I'll introduce a little bit later on. Today, the webinar session will be a little bit different from what we're used to. Since it's Mother's Day this weekend, we figured that it'll be more fun and interesting to kind of, celebrate motherhood, and as well as invite relevant people to speak about, managing finances and family. So, joining us with three lovely ladies, starting from my furthest left, is Dawn Sim, health coach and blogger of ThatMomOfFour, co-founder of a fitness studio and a mother of four.
Thank you for the introduction. So I do co-own a studio, a gym, Trim Fitness, and I've been teaching for over 22 years. So that health coach part actually encompasses quite a few things. I don't just speak to my clients and my students. I actually do conduct the classes as well. So that includes yoga, Pilates, and aerial, though I started with more hardcore stuff in fitness. Now I think as I age, I have to do more sustainable things. So yeah, more yoga, Pilates, and aerial.
Cool. Welcome. And next we have Michelle Hon, Chief Baby Planner and blogger behind TheChillMom, author and entrepreneur of Mom Boss Academy and a mother of three.
Hello, hi everyone. Thanks for having me.
And next to me, we have ZoeRaymondTan, blogger since 2008. You're one of the more popular content curators here, and a mother of two.
Thank you so much. Hi, thank you for having me. My name is Zoe, and I'm a mother of two. I've got an older girl, Ariel, who's 3, and a younger boy who is 1.
Cool. So I would like to introduce, how the session's going to go today. There will be 2 parts. So the first part will be a panel discussion whereby these ladies will join us in a, series of questions related to finance. So if anybody in the audience has any questions, do feel free to pop them into the Zoom chat, and then we'll take them in as we go along. So the aim here is basically just for us to open up this conversation, be very real about it, and then, sharing firsthand experiences, when it comes to managing money, balancing priorities, as well as a family. And then the second part of the session today, Nick will be kind of taking us through the different Syfe products, what we are, what we offer, and a little bit about how Syfe could be integrated into, your overall financial planning goals. So just without further ado, I guess just to kick us off, maybe you ladies can kind of share a little bit in terms of where you are in your investment journey.
I guess I'll start first. Speaking about investments, I guess the most basic part will be just savings. And for each one of us, I guess we start off at a very early age with our parents, which brings me to the point where as parents, we really are the first advisors to our kids when it comes to investing or saving. So how I've been doing it has, initially been what my mom taught me, which is to just, save what you have at the end after you, have your recess and you spend the money, you get all these leftovers, you put in your piggy bank. How I do it now is very different from how it happened then. And we learn as we go along, right? And things change along the way as well. So how I do it now is also some advice that I've gotten along the way from, friends, from financial advisors, my husband as well. And right now I actually have to set aside money first, and then whatever is left over I actually do spend on what I want. So the needs have to come first, and to also know that this will be enough for what I need for my retirement. Then you just spend the leftovers on the material stuff that you've been wanting or eyeing. Yeah, so that's just how it's like for me right now when it comes to investments.
Okay, so for myself, I think I have invested on and off. So I started working really young at the age of 16. I started, working overseas as a model, and I travel. I've always been those who and I don't spend much. I'll just be like saving everything into the bank and not really investing it because I just don't know how. My first major investment had been a property at the age of 22. That I've just invested in properties, but as you know, investing into properties, your money is stuck there until you flip it, until you sell it away, and then you have to kind of like time the market, and then there's like maintenance to the property. You need to manage the tenant and all that. So I've always been looking into how I can maximize my earnings. As we know, putting money into the bank, you're just actually losing money to inflation. But sometimes it's just like, with work and everything, we just don't have the time to really sit down and think about how, what can I do with the money. So recently I actually invested in Syfe.
For me, it's similar to what Dawn has mentioned. So when I was younger, my mom had brought my sister and I to the bank. We opened the bank account, and with the bank book, actually taught us about saving. So when I have got red packet or I've got money, pocket money left from recesses, we will go to the bank. Sometimes we'll have to queue up to do it because I've got notes and coins. And then as I grew older, I started, when I was still studying, when I've got more savings, my mom would teach me to put it into fixed deposits. And as I started to work, it revolved as well. So she introduced stocks to me. And my mom knows that I've got really low risk appetite. So she got me the safer ones, and she helps me to manage them. And besides that, my Aunt Julie, who's a financial advisor, she helps me with some good financial planning, and I also got education plans for the children. So like what Dawn has mentioned, after you have kids, you put them as your priority, you get things that you need for them. You will think twice whether you want to buy this, or this could be better used for maybe their ballet classes or piano classes in future. So yeah, this is how it is for me.
Wow, it's great, to hear that, there's a lot of people in your family, and it's giving you that kind of advice. I guess the next question is how do you, now that, as an adult with managing different priorities, how do you, navigate through all of this information, right? Because obviously there's so many different sources. How do you pick who to listen to, or what things to read up on?
I think information is key, and you can have an overload of it, or you can have, a lack. I would rather have the former, but just making sure that you also have, somebody who's in the know to give you better advice. So you may have all the information out there, but you may not see the big picture. So when it comes to actually being able to, put the information that you have to good use, I think having a financial advisor or an expert is going to be key. So it may be somebody it may be somebody you have to engage. Very often it's going to be involving paying somebody to do that. But I understand from, with Syfe platform, the information is all there, and you can actually, get all the details about what works better for you, and then you can actually manage it yourself. When I landed on the page for the site, I found that, just on the first page itself on the website, all the information was there, and it tells you if you fall into this category, if you are this sort of a person, the kind of risk appetite that you have is this much or this low, this actually works better for you. And the greatest part is you can actually test it out first, because there is no minimum amount that you actually invest in. So if you see that, hey, actually this is something that works for me, you might want to put more into it. So there is still that testing ground that you can work with. But I think just having somebody to still advise you is still a lot better. So the good thing is there are still people that you can seek help from when it comes to a very user-friendly platform where you can, at your own time and space, like Michelle said, we don't have the time to look for all these sort of things to know that we're getting the best. But I think along the way, having a helping hand at any point in time to answer our questions and to just guide us along. Sometimes our needs change as well. I think that's really, really helpful.
And in terms of goals, I'm pretty sure you have many things to manage, right? Do you ladies have any specific financial goals that how do you set them, and how do you categorize, and how you making sure that you're moving towards those goals?
I need to learn from these people. I don't. So for me, it's just more like, okay, just make sure I'm making this much money, right? For me, as I believe we're at that prime age where we should be accumulating wealth for our older age. But yeah, I really don't know how much I should set aside. So That's why I think it's important to, again, like, you know, what Dawn say, talk to someone who knows, like a financial advisor, or I think Syfe has that capability as well, where you just put in, I want to retire at what age and how much I want to retire on each month. And yeah, something like that that could kind of like give you an idea of how much I should retire on and how much I need at the end of the day, right? Because a lot of times, like, maybe, you know, you're like myself, like have no idea. I just know how to make money. I don't really know how to invest it. So yeah, so I guess like, yeah, information is key. Know where you're investing your money into.
So I feel like a lot of us save, and then we do not know how to use, but do not know where to put our money in. And I think for me, what's important is I know there are a lot of portfolios around, but it has to be something that I'm comfortable with and I can go to sleep at night.
That's true. Yeah.
Yeah.
So what would kind of be the things that make you, would make you feel a little bit more comfortable when you want to, select a portfolio or like a product? Is it more like, like what kind of consideration factors that you use in order to
I feel like
those
if for
decisions?
someone with lower risk appetite for the start will be probably putting in lesser. It doesn't matter if the percentage gain would be lesser. Yeah, I feel that for start will probably be somewhat like that for me.
Okay.
Yeah, I think for me it's transparency,
Mm.
being able to log on and see it's still there. Like, ooh, how much I've made, ooh, how much I've lost. At least I know. So yeah, I need to know. So
And for me, I think it's knowing that I can take my money out anytime,
Mm.
and it's not stuck somewhere.
Mm.
And I mean, all of you have children, all of you have more than one children. So my next question is, I guess, like, since you have so many, how do you manage, different child's education? Do you set aside like different budgets for different child, or do you have a pool at which you pull out at, at times, 10, 20 years down the line when they actually need the finances?
Currently, for us, when my husband and I got married, we actually put aside every month our salary will go into this joint account because we know that we wanted kids as soon as we can. Okay, so when the kids were born, we got them the education and the insurance plan. So currently, it's pretty fixed. It's fair, 50-50 for them, but slightly more on my daughter because now she's older and we put her for ballet classes and all. So we do not really have a fixed amount on who gets more at this point of time, but probably when they're older, we can see how their interests are, and probably it will alter along the way. Yeah.
And I guess another question that I would have about children is, how do you feel about educating your children about money? A couple of you mentioned how you were educated as children, but how are you? What are you doing differently, or how are you teaching your children about money?
Well, it's been quite a journey, all four of them. Like, what I taught my oldest daughter is still something that applies, and I'm still teaching my younger one when it comes to money management. So she does save her money, although she doesn't have recess yet. She's in preschool, but she does have her red packet money from Chinese New Year. She has her, her birthday red packets from her grandparents. Just understand that, when she wants to buy, like, sometimes they buy that they just leave lying around the house, but 2 days later, and like when on it, like, what is it? So I've been teaching all my girls about the difference between needs and wants, and the bigger part of the pie. If you all had a pie, a part of it will go to a need and a part of it will go to a want. If this is all you have in your pie, what are you putting into the wants, and what are you putting into the needs? And then I share about money as well. Like, if you have $10, how much are you going to put into what are the wants that you have now, and what are the needs that you have in your life as well. So especially when it applies to the older ones, they understand this a lot better. So they know that, okay, the needs are my, the bus card. I need to top up my the card for the bus. I need to have enough money for my recess. I need to save up some money so I can buy my friends presents. And then the rest are like stuff that I want to buy for myself. Like this notebook, this fancy pen that's useless, and it doesn't function as well as another pen. Yeah. So they do understand all these differences, but I find that it's just getting them to understand the difference between a want and a need is key first.
Yeah.
Yeah, for me, I think, you know, I work from home. I built my business from home, so it has sort of like rubbed off my kids. So like last year during circuit breaker, they started a business by themselves, just like on, you know, they were like, okay, I need a website, mommy. I'm like, no, you don't need a website. You just need an Instagram account, right? So they started a Instagram account selling slime kit. And they made $600 in the first month. That's pretty good, right? And so yeah, I think like, you know, tell them that it's not too young to make money. Put your money into good use. And my husband is in finance, and he's planning to teach them like, you know, how to invest in stocks and stuff. So I'm leaving that to him.
I guess that's, you know, so I guess like the next question for me we can go into is as a mom, where you're juggling like so many responsibilities and, you know, priorities, what kind of keeps you up at night in terms of, you know, when it comes to money? I know it's a little bit, you know, you know, of a mood changer, but if you could share.
Doing what I do, like, you know, if I am sick, if I'm out of action and I can't teach, like, you know, the nature of my job is such that, you know, when I teach and when I conduct sessions, that's when I get my income. So if I am ever down or if I'm injured and I can't work, that is actually something that keeps me up at night. And that's why I take extra care of myself, like, you know, physically and mentally. So knowing that there might come a day when if I get injured and I can't have my, you know, usual monthly income coming in, that is a major worry for myself. So setting aside money to, you know, tide this period through, which I don't know how long it would take, is yeah, I do worry about that. So my husband and we do actually have, like, you know, insurance, but then again, it's probably not going to be able to fulfill the wants that you know, the needs will be covered. But what about the wants? Yeah. So I guess just making sure that whatever that we can save and set aside to help it grow also. It is often in the back of my head. But, you know, with the hassle, Michelle mentioned it earlier as well, like, you know, when it comes to wanting to invest your money, we don't have all the information that we need and the knowledge that we need. So we would trust somebody else to do that for us. But when it gets too troublesome, I'm like, you know what, I have no time. And then you just put it at the back of your head and you forget about it until that worry and that sleepless night comes up again. Yeah. So yeah.
I agree. I think that we can all agree that, you know, procrastination is probably one of the things that we struggle with when it comes to like money. It's like we're so overwhelmed by like many things out there. People are telling us different things. We know that it's important, but we kind of like never put priority behind it. So I think, you know, getting those things in place is quite important.
Yeah.
So we have a question from the audience. So let me just read this one. And if the audience has any more questions, feel free to keep them through, and then we'll take them into the discussion. Yeah. Okay. So I'm a working mom of 2. I have never had any background for investing. I'm worried that this would take more of my time. How do I start?
Would that be a question for Nick or us?
Look, I would say, you know, and just to, I guess, supplement a lot of what's been said today is, you know, people tend to get a little bit scared about managing money. There's a lot of information out there. There's a lot of different options out there. You know, in Singapore, there's a lot of banks, there's a lot of bankers, there's a lot of people trying to give out financial advice. So the first thing I would say is don't overthink it. You know, the key to success with money over time is regularity, is consistency. You know, having a plan, setting a household budget, putting aside some money for savings, and having those savings work for you. And this is, you know, we'll get to Syfe later in the session, but this is really what Syfe is aiming to do for people like yourself, is to take away that complexity that can come and that can stress people out about managing money. So start with a household budget, have some money set aside each month from your paycheck after you meet your expenses, and start to invest it. And our platform is one very easy way to get you on that road.
Cool. Another interesting question. My husband has been the one taking care of finances. The inertia to start is high, especially when finances are technically taken care by him already. Do you have any advice for someone like me?
I think for me, right, for myself, I'm not sure if you can identify, is that I find that when we are comfortable, when we're kind of like, everything's taken care of, we're comfortable, we don't like to think. We don't like to there's nothing that pushes us to let's go invest some money, right? It's only when we are desperate, that's when we're okay, we need to do something about it. Or that's when we have suddenly maybe, some sort of push. You may be watching this and you suddenly get this push to okay, I need to do something with money. That's when we invest. That's when we take an action. And so I think that's a comfort space that I personally, that I'm very afraid that I can get too comfortable, everything's taken care of. And especially if you're a working mom, even though you think you're not investing, you are, right? You are investing into your CPF already. But it's just more that, the excess that's sitting in the bank, what are you doing with it? Because if it's just sitting in a bank thinking that, that's security, it's really not, right? So if you put it into a financial plan with Syfe, where you can just take it out anytime, is pretty much like putting it in a bank, just with high interest rate and better returns.
Yeah, and I think the good thing about the current options that we have right now, especially with Syfe, is the amount that you put in to start off with. Yeah, so one thing I would say that it's a barrier for many of us to enter into investments is the amount that you have to put in for a start. But if the amount is minimal, and in fact there's no minimum amount for the platform like Syfe, then I think why not give it a try. I am.
I just did, so.
All right. So, do you guys have a portfolio for each kid, or do you guys organize your own investing?
For me, we do have one for each kid, and I guess who was it who said it earlier? Was it your husband, Zoe? Yeah. So my husband also manages the savings for our kids, each one of them. So we make sure that by the time we retire, we still have enough to pay for their studies. And saying that as well, apart from just the savings, where we just moved house as well. I know you did also. Yeah. So we had a really big conversation about this. Finances. I think expenses have been going up with lifestyles. These days, even though we're not traveling, I think we're still spending a lot. But when it comes to making our money grow, it shouldn't just come from our monthly savings. You can't just keep working and going on and on and on. With the amount that you save, we definitely have to keep letting it roll, keep letting it grow, even after you decide that you want to stop working. But it shouldn't grow at such a slow pace. So what he also decided was to, apart from helping our kids each have their own portfolio to make sure that they have enough for their savings, is also enough for us to retire and not have to eat into what we want to be able to give them as well. So that's why we decided to buy a property that it's not going to depreciate in its value. So the other thing about the investments that we put into or decide to put our money into, I guess I'm also a low risk taker, and I want to make sure that whatever money I put in, it grows, it doesn't go down. So when you look into the kind of investments that you're taking as well, there are different options. There's some that are higher risk, but you might lose your money, but there are some that are lower risk. You may see it grow slightly slower, but you'll still get your money back and more in the end. So just
and one thing I would supplement is thinking about time frames as well. And in a way, bucketing when you're going to need certain pools of capital, at certain times in the future. And even if you perceive you are lower risk, there may be a certain part of your portfolio that you don't need for a while, that you're happy not to watch every month, in case there are some days where there's a dip. And I would encourage you to take appropriate risk depending on how you bucket your overall portfolio.
Yeah.
And I mean, now that we've touched upon, balancing your own kind of personal, retirement sort of goals and, the needs of your children and the expenses, do you guys normally have a rule as to okay, these are the proportions that I would, split them into, or is it generally a bit more flexible, because I guess like priority is the kids, right? But then at the same time, you want to have that retirement saved up as well.
Currently, there is no like fixed proportions, for us, I mean, like both of us, we each have our own plans, which we got from our financial advisors, and the plans that will help us with capital appreciations, and so the education plans for the children to make sure that we have something for them already. And of course, now that we know about Syfe, it's something that we want to look into, especially for me. I'm not so I don't have so much time, or I'm not as well read as my husband. So he's recently into he would read a lot of news, and he would look at his phone. I don't think I'll be so I don't have the luxury of time to do so much of that. So I think for me, Syfe, it's really a place that it's suited for me, because you'll be able to manage it for me, and I can actually choose whichever that helps, whichever that fits my risk appetite.
Cool. We have a question more related on the product and Syfe, so maybe it's also a good time for us to like maybe give an overview. But I mean, this question is, what is the difference between Syfe and other platforms in the market? What made the three of you start with Syfe? And then what kind of portfolios, would you recommend for me? So I don't know if you want to...
Is that a good opportunity to maybe spend a little bit of time talking about Syfe and talking about our products, and then maybe we can circle back with any more questions afterwards. Why don't I just very quickly introduce myself? So my name is Nick Walker. I'm the head of investment product here at Syfe. I think on the following slide, there's a picture of my family. I have two little girls, a 2-year-old and a 4-year-old. And I do want to take this opportunity to wish the mothers here a happy Mother's Day for this Sunday, and thank you very much again for joining us. So I'm just going to spend a few minutes talking a little bit about Syfe, who we are and what we do. So on this slide here, there's a bit of information about how we started. So we were incorporated back in September 2017, and we obtained our license and launched our first portfolios in 2019. So we're quite a young firm, but we have grown fairly rapidly since then. We've launched a number of portfolios, including our REIT portfolio. In 2020, February, we launched our Equity 100 portfolio mid last year, and most recently, early this year, we launched a portfolio focused on cash, as well as our range of core portfolios just in March. We have a strong and growing team with people that have worked in large financial institutions, as well as large technology companies. And on the right-hand side, you can see our leadership team with our founder and CEO, Dhruv, as well as our other senior executives. On to the next slide. The important stuff here, we're regulated by the MAS, and we use the biggest financial institutions in Singapore and globally to keep our customers' assets safe. So our deposits are held in a trust account with DBS, and assets bought on your behalf, we use Saxo, Citi, and HSBC. Moving on to what we offer on our platform. So this slide, it's a little busy, but let me walk you through it very quickly. Starting from the left-hand side is our lowest risk portfolio. So we call that Cash Plus. So as you probably know, interest rates are very low right now, and they've been low for a while. And so if you have money sitting in a bank, it probably doesn't earn much interest at all. And so the Cash Plus product is really designed to be a solution for that. It takes a little bit more risk than a bank deposit, but in return we offer an enhanced return, currently a projected return of 1.5%. So there's not a lot of risk. Generally that portfolio will go up over time. We earn that return through investing in bonds and money market instruments. Moving a little bit further to the right and slightly more risk is our REIT Plus product. So a REIT is a real estate investment trust. It's essentially a company that holds properties. In Singapore, there's a number of REITs that are listed on the stock market. Our REIT product is a diversified portfolio of Singapore listed REITs. That gives you a broad, diversified access to that portfolio, and it's essentially an income portfolio. So you earn passive income from the rental income from the REITs, as well as growth in the underlying asset value of the properties that are held. Moving along to the next category is our core portfolios. So there, and this links back to some of the points made earlier, we really have 3 different portfolios designed to match an investor's risk tolerance. So if you're a fairly conservative, non-risk-taking portfolio, we have the defensive option, we have the balanced option for people that are happy to take a bit more risk, and then we have the growth option for more longer-term investors that are happy to take on a high level of risk. And the underlying assets here are a global portfolio of stocks and bonds. And then on the right-hand side, our highest risk portfolio is called Equity 100. So I guess it's clear in the name, but that's invested in equities, which is stocks, a global portfolio of equities with a growth orientation. We have a lot of the companies that you would have heard of, Tesla, Apple, as well as a current focus on China and Chinese technology firms. So that's what we have on our platform. On the next slide, you can see, and I won't spend too much time here, but this is just an example of how an investor may think about bucketing their wealth and using our different portfolios based on how what their time frame is. So for example, for money that you will need within a year, you probably want to put that in something like Cash Plus. For money that you don't need for 15, 20, or even 25 years, you can put it in some of those longer term, higher risk portfolios. If you don't like seeing volatility, make sure you don't check it too often, but over time, those portfolios will deliver the highest returns. On the next slide, just very quickly, this is really what we're trying to do with Syfe, and I guess this comes back to Syfe versus other options for investing, is to make it really accessible. We're a digital platform. We do have advisors, which I'll get to in a second, but you can log into your portfolio on the website, on our app at any time. You can see what you have invested with us. You can make deposits, you can make withdrawals all through the app and through the website. So we're bringing investing into the digital age. And that's I think, one of the key benefits that we're trying to offer to clients. And relative to our competitors, we're really trying to make investing as easy to understand and as easy to implement as possible. Moving a little bit onto just the fees. So we have a sliding fee scale depending on how much you have invested with us, starting with our blue scale at 0.65%, which is very attractive relative to other options out in the marketplace. For those of you who use banks or financial advisors, I think you'll find that the fees are generally double or more of those fees. And then obviously as your portfolio grows with us over time, those fees do reduce as well. So just, I guess, to summarize the value proposition with Syfe, so all you pay with us is that one advisory fee. We don't charge any trading fees. As I think was mentioned earlier, we don't have any minimum balance to get started, so you can start with $10 or $50, try us out, see how it goes, and then you can add to the portfolio over time. You can also get your money back for free at any point in time. It only takes a couple of days to move the money out of your portfolio back into your bank account. We also rebalance your portfolio in an automated fashion over time, so you really just don't need to think too much about how we're investing. And then lastly, I guess, and this does answer a little bit of the question that came through, is, how does this compare to doing it yourself? A lot of customers come to us and say, well, why can't I just open an account with a broker and buy ETFs or buy stocks myself? Of course you can, but it's a lot more complicated, and it requires, especially for busy people like all of us here, it requires a lot more day-to-day work and probably day-to-day stress as well. So it takes longer to set an account up. There's higher minimums. There's also fees, like brokerage fees, whenever you trade in and out, as well as in many cases management fees that are quite a bit higher than what we charge. And then finally, and I mentioned this earlier, we do have people as well. We are a digital platform first and foremost, but we have a fantastic team of wealth experts, and no matter what tier you are with us, even if you put $10 with us, we will give you access to this team, at least to begin with, to review your current investments, help you plan out your future goals and your bucketing, and just to run through in detail what we offer on our platform. And then finally, for people that scan this QR code, we have a 6-month fee waiver when you complete a feedback form on this session. So for those of you that are on the webinar, please scan the QR code, and that will bring you to the website where you can do that.
Thank you, Nick, for introducing, Syfe. And I guess just to go back a little bit on the portfolios, because Syfe has so many different ones, and it can be a little overwhelming for someone who's just, getting started. What would you like? What have you ladies, you've invested in Syfe? What was your kind of process, going through this, like deciding between which ones? How do you compare? Like, how did it happen for you?
For me, besides Syfe, I've invested in properties. I've invested in, those insurance/investment funds and unit trust. So I have those, and I've always wanted to get onto the equity market, stocks, but I just don't have the time, right? And my husband invests in stock, and I know how it is. Like, he will stay up at night and like going seeing it out and say, oh, I need to get it out, but then it's midnight here, the markets haven't opened or something like that. He will miss out calling the broker or something like that. And then, the prices change in the morning. So I just didn't want that kind of stress, but I want to get in it. So for me, that's why I just choose core. It's a balanced portfolio of, a bit of everything. And the cool thing is I didn't actually have to choose. I just went onto the website and just clicked like how much I have, what's my, what's the projected return. There's a slider that I can do, and then they just tell me that, oh, yours is the core balance. I'm just like, all right, let's just do it, right? I mean, if I decide to change my mind tomorrow, I can just go in and just like, okay, let's move on somewhere else. I don't have to get charged taking things out in here and there, because with unit trust, like, I'm also a lazy person. I don't like to look at it. But then my financial advisor will be like calling me, oh, this market is tanking, blah, 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 let's move. And I'm like, do I really want to, right? For me, it's like, it's fine if the market is going down. As long as you don't withdraw it, it's just paper loss, right? You don't lose your money. It's when you switch that account, like every time you take from one fund to the other one in a unit trust, they actually charge you a fee. So I try not to do that. But, with Syfe, I could. So that's the reason why I invested in Syfe.
Yeah, I think a lot of investors fall into the trap of maybe getting a bit emotional about their investments. Certainly at points in time like last year when all the COVID lockdowns were rolling through, there was a lot of volatility in the market. And as hindsight has shown us, this was probably the worst time to be making changes to your portfolio. And we at Syfe certainly encourage investors to put aside some money and trade in an active way. But the main part of your portfolio, we would suggest for most people is better in a managed portfolio, low fee managed portfolio that you can sit back and let us do the hard work on.
Yeah. Well, for me, it's really knowing that there is no large sum that I need to dump in right from the very get-go. And I can actually start from any amount that I'm very comfortable with. I mean, I do have investment-linked funds. I do have investments as well, other than, which I don't really manage myself. But here's where I can actually see, things moving. But just having that reassurance that, if I did need the funds that I put in for investment at any point in time, if I needed it urgently, I can still take it out. Yeah, so that's really what makes me very inclined to want to invest with Syfe.
I think like for me, over the years, it's always been my mom helping me, advising me on what to do and helping me with my investments. So I think Syfe is a really good platform for me to start somewhere, especially when I can put any amount. I can choose whether I want to put this certain amount of money for a longer period of time, like what Michelle said. It could be just paper loss. I could just keep it there. If I don't need the money urgently, I can keep it there for a bit more and see how it goes.
Yep. And I mean, I want to emphasize on that as well. We really, really don't have a minimum. I think I remember starting with Syfe for the very first time, I've literally put only $100 just to make sure that it's okay. And then, started putting more and also more regularly as well. I think it's a great platform to DCA, or what's called dollar cost averaging.
Right.
Yeah. Do you have any insight as to, how would one kind of do that over a course period of time? Because obviously, we don't, I mean, it's like, it's managing risks, right? And then like kind of spreading it over the long run.
Yeah.
How can Syfe kind of help customers or clients?
Yeah. So I mean, dollar cost averaging, which you mentioned, is is a great way to invest over time. I mean, I think the data is fairly clear that most people are not able to time the market well, and so the best way is just to have a regular plan to invest your money. And each month when you get your paycheck, get a bonus or some payment, just put a certain portion in your portfolios and do that over time. And over the long term, those assets will build. I think people that discipline helps to avoid some of those, I guess, emotional biases or behavioral biases that people have to try and time the market. And that's one thing you can do right now with Syfe, is have an automatic amount that moves from your cash plus portfolio into your investment portfolio on a regular basis. And that's a new feature that we have that we've introduced to help investors with that.
Mm-hmm. Now we have a bit more, I guess, like currency related question, I suppose. So can I fund my account with a foreign currencies directly without converting to USD and SGD first? Don't want to lose out on the exchange rate twice. This is something that Syfe offers.
So currently no, it's SGD or USD. It's understandable that you don't want to lose out, but this would just be a one-off. We'd certainly consider in the future whether or not we can have other currency options. But yeah.
And we seem to have a viewer coming from Australia as well.
Oh, great.
So is your app fine for Australia users and syncs to AUD?
It doesn't sync to AUD, but I believe that it should be possible to open an account from Australia, yes.
Another one on, is the wealth expert call at Syfe free?
Yes, it is. It's free. It's free of charge, and as I mentioned, for our blue tier, it's you get that service as a one-off. As you move up the tiers, you get regular access to your wealth expert at Syfe to help guide you along your investing journey.
You ladies have had a call with a wealth expert as well.
Yes,
So how was the experience?
It's really good, and it's really easy to make an appointment. You just go to the website and you choose the date and the time that you want, and then you get a call with them. It's very fast.
And our wealth experts are all licensed representatives with work experience from some of the largest institutions in Singapore and globally. So you're getting seasoned professional advice from them.
All right. I mean, we've talked a lot about, equities and, investing in that side. Let's step back and talk about REITs a little bit. I know that, Michelle, you have, property investments. I'm pretty sure all of you do, right? Are you familiar with the REITs or a REITs product, or have you, heard anything about it?
Well, I guess Michelle should.
Yeah, I mean, I know about the the existence of REITs, but I've never invested in one before. Yeah, I just didn't know how to get into it.
No, I mean, REITs are a great vehicle to get exposure to property without the hassle, as you mentioned, of being a landlord. You're a landlord without having to manage the tenants yourself. And so, Singapore has a large variety of REITs listed here in the market. And our REIT product is a passively managed portfolio of all those REITs that we manage in-house. And so you basically get to be a landlord without having to go through the stress of being a landlord.
Yeah. I've never invested in REITs before, but definitely having this ease of use, it's something that people like myself who have never done any investment with REITs can definitely look into. Yeah. But what about the I mean, with people who do have is there a minimum? There's no minimum amount even when it comes to REITs, right? So as you move up the tiers, like you were saying earlier, and the calls with the wealth experts, is there still a time limit every time you make an appointment with them, or?
You know, I think that as you build your relationship with your wealth expert,
Uh-huh.
I'm sure that's negotiable. I think you know, obviously, obviously they're here to help, and you know. They really are very good. They're there to guide you. They're there to continue to keep you on track if you're, you know, maybe feeling a little stressed, particularly in certain market environments. Yeah, so I would say, generally there probably is because they're quite busy. But,
yeah, because it makes a lot of sense. I guess as your risk goes up, you just get more calls to the wealth expert.
yeah, that's right.
We have a few more questions about REITs specifically. So, you know, what properties are covered in the REITs portfolio, and are we like, you know, do we have to pay taxes on them?
As you may be aware, the income from REITs in Singapore is not taxable for Singaporean citizens, so there's no taxes. The properties are those owned by the biggest property companies in Singapore. So you've probably heard of Capital Land and Mapletree and Ascendus Trust and names like that that own properties both here in Singapore as well as properties in, you know, in other major cities around the world.
Okay. Can we use our CPF to invest?
Currently, no, but it's something that we'd love to offer in the future. So please watch this space.
Okay. All right. I think we've talked quite a fair bit, you know, like on the Syfe and products. So maybe I don't know if it's good to, you know, like come back and then talk a little bit about, you know, because now it's Mother's Day. You know, we've talked a lot about how, you know, you guys as like women manages your finances, and then I guess if you had to teach, you know, your kids one thing about money, what would it be?
I would say do not put your eggs all in the basket. Yeah, I think that was what my mom taught me as well. And when I told her I was coming on this, and then I said, oh, this is the question you're going to ask me. And then she repeated this because there's no one I said that will be consistent. Yeah, so to diversify your portfolios.
Something that I like to change from, you know, my own parenting is that when growing up, we didn't come from a very well-to-do family. So I've grown up with this scarcity mindset that, you know, it will always run out. So I've always been a big saver, right? So, but I think with my kids, I like to teach them that, you know, the world is of an abundance. So what you give is what you get, and so don't worry about giving and investing. It will come back to you.
Yeah. For me, it's definitely, well, I agree with what Zoe said, and it's what I also tell my kids, like, don't put all your money in one basket, don't put all your eggs in one basket. But the prioritization, like what I said at the beginning, it's still something I emphasize a lot to them. Things are just so volatile, like what's going on right now. Many people are going to have a pause in their jobs, I guess. Those who do work freelance, especially, you know, if they don't have, like, you know, other jobs that they can do, then they're stuck. So just like your money as well, I think having that savings is great, but also being able to make your money grow for you in various aspects, or how you can actually have different sources of income, is also a very important thing that they have to think about now.
And is there anything that, you know now that you wish maybe you knew like 10 years ago to, you know, adapt your strategies, I mean, in terms of savings?
Invest as soon as you can.
Yeah.
Because it's really the time. It's not how much you invest into it, it's how early you start investing.
Yeah, totally agree. Not when you have a lot more extra money, but even when you just start earning, it's just to, you know, and you're going to start saving, that part of that savings actually should go into investment.
Oh, very good. So I guess this is just to wrap things up, I suppose. You know, what advice would you kind of give for like someone that is, you know, totally zero, kind of don't know anything about finance? How would you know recommend your fans or your followers on how to get started?
I think you can go to the Syfe and you fill up your risk.
Speak to a wealth expert.
Yeah.
All right, thank you so much, everybody, for your time. Thank you, ladies, for joining us.
Thank you for having us.
I think it was a very fruitful and insightful session. And if you guys have any questions about Syfe, the product, we'll try to go through them and in the comments. Thank you so much for joining us this evening, and have a lovely Mother's Day weekend.
Happy
Thank
Mother's
you.
Day.
Thank
Happy Mother's
you.
Day.